When tensions flare between India and Pakistan, the impact isn't just local, it ripples all the way across the world, right into the heart of the American economy. You might think a conflict thousands of miles away can't affect Wall Street or your crypto portfolio, but think again. The Indian subcontinent is home to 1.8 billion people, 2 nuclear powers, and one of the fastest-growing economies in the world. When conflict breaks out, markets pay attention, and so should you. Here's how wars and escalating tensions in South Asia shake U.S. stocks, cryptocurrencies, and the global economy today. Tensions on the India-Pakistan border trigger immediate volatility in the stock markets. Why? Investors hate uncertainty. When news breaks of missile launches or border skirmishes, global risk appetite drops, leading to sell-offs in volatile assets, especially emerging market stocks, and tech shares with ties to Asia. U.S. tech giants and semiconductor companies with supply chains in India or neighboring countries suddenly face risks, pushing their stock prices down. At the same time energy prices spike, South Asia is a major consumer and transit route for oil and gas. When wars escalate, the threat to energy supply routes causes oil prices to surge, sending ripple effects through the U.S. economy, increasing inflation and putting pressure on stocks. Now let's talk about cryptocurrency. The crypto market, known for its rapid reactions, often acts like a global risk barometer. During times of South Asian conflict, investors flood into Bitcoin and stablecoins, viewing them as safe havens outside traditional markets and fiat currency risks. But here's the kicker. Crypto exchanges and blockchain companies are heavily dependent on talent and tech from India, one of the world's top hubs for software development. Any prolonged conflict or instability can disrupt this ecosystem, causing unexpected market swings or even impacting crypto project development timelines. On a broader scale, the wars influence foreign direct investment (FDI) and global trade. The U.S. and its corporations constantly evaluate geopolitical risks. Persistent India-Pakistan tensions increase risk premiums on investments in the region, making companies hesitant to expand or shift supply chains there. This slowdown affects multinational earnings and the overall growth story of emerging markets, which in turn weighs on the S&P 500 and NASDAQ. But the financial impact doesn't stop there. U.S. government responses, like sanctions, military aid packages, or trade deals, can trigger stock market reactions. When Washington signals support for one side or ramps up defense spending related to South Asia, markets adjust to the new political risk, and so do your investment portfolios. Here's the twist. Despite all this volatility, savvy investors see opportunity. Market dips caused by regional conflicts often create buying opportunities in undervalued stocks or crypto assets connected to South Asia's growth story. The key is knowing when to act and when to hold back. In summary, wars and tensions in the Indian subcontinent aren't just geopolitical stories. They are financial events with real consequences for the U.S. economy, stock market, and crypto world. If you want to stay ahead of the curve, watch these conflicts closely. They might just affect your portfolio more than you realize. If this video helped you understand the hidden financial impact of South Asian conflicts, hit like and subscribe for more deep financial insights. Drop a comment. How do you think current India-Pakistan tensions will affect the U.S. markets next? Let's discuss. Thanks for watching. Stay smart, stay informed.